Hello everyone. In this video, we are going to see what ETFs have performed in the past, and we are going to compare with the benchmark with an asset which it is following, if any, and what return it has produced compared to that asset. So basically, this is Edelweiss Nifty, meaning this ETF is following the returns in Nifty. It is in market since 2015. Now, when I compare it with Nifty, Nifty has performed and given 75% return in this time, whereas this ETF has given 121% return. Now, this ETF is Nifty EES. If I spell it NIFT by double ES, this is an ETF which is trying to correlate with Nifty. The next ETF that is in my mind is N100. This is an ETF of Motilal Oswal Financial Services Limited. The ETF is trying to correlate the return of Nasdaq by investing in the US market. So let's see whether it is successful or not. Nasdaq has produced 491% return since 2011, whereas this ETF has performed 876% return, much more than what Nasdaq has performed. And hence this ETF is a success as well and a good place to invest with a diversified risk. The next ETF in my mind is Kotak Mahindra Gold ETF. It is an Kotak Gold by the name Kotak Gold. It invests in gold and trying to correlate its return. It's in the market since 2007. Now, while comparing gold, there are two golds that are taken into consideration. One is this one, which measures the price in US dollars by OZ. It is the international price of the gold in US. The second is gold futures in India. So if I use India gold futures, it's since 2015 only. Since this time, the return has been nearly equal, 77% by gold and 69% by Kotak Gold. To compare since inception, I will use the gold price of in international gold price. Compared to that, this ETF has nearly performed double return. The gold listed on TBC, which means US, has produced 159% return, whereas Kotak Gold has performed 355% return. Yes, they both cannot be compared. One is the gold in India, one is the gold in USA. However, there is some correlation between them. When you see, gold was rising in both cases till 2012, consolidating till 2019, and again rising till 2020, and then making a peak in the same month and then falling since then. Yes, there is a correlation between them. However, Kotak Gold has performed much better than international gold. Now, next ETF is also by the same fund house. There are many ETFs like Kotak PSU Bank, Kotak Nifty, Kotak Bank ETF, Kotak NB20. We are going to see the performance and try to correlate between, if any, benchmark. Kotak PSU Bank has been declining since its inception or in consolidation. It would have given dividends because it invests in PSU. But however, let's see if we have any index. Yes, we have Nifty PSU Bank Index. Compared to that, it is just equal, nearly the most equal performance to a benchmark possible. The Benchmark has performed 28% return, Kotak PSU Bank has performed 29% return, just nearly equal, and hence again a good option for stable investment. Next ETF that we are going to observe is Kotak Nifty. Let's see what it has performed compared to Nifty. Nearly equal. Kotak has given a return of 216%. Nifty has given a return of 201%. Since 2010, it's been tested since more than 10 years and performed nearly equal, but a little better. It is always nearly always above Nifty in terms of return. Yes, so it has performed better than its benchmark. Let's see if we have any other ETF of this fund house left or not, which we can monitor. Kotak Bank ETF. It has been performing since 2014. Let's compare it with Bank Nifty. The returns are nearly identical. Kotak Bank ETF has performed 75% return, whereas Bank Nifty has performed 73% return. Thus, another way of investing stably and with flexibility. Now, this ETF M100 is a little different. It is an ETF investing in mid caps. Now, mid caps has been rising since few months, and this ETF has performed really well from 17 rupees to 25 rupees. And if we compare it with mid cap index, the returns are better in this ETF. Mid cap ETF has performed 252% return, whereas the benchmark, the index, has performed 225% return. Thus, another better alternative than mutual fund. Directly in these ETF, stable returns, comparable to benchmark, not much volatility. The only volatility observed is the same in an index. Let's try to find any other ETF if we can find. There are few by SBI. If we can find them over here, this is an SBI ETF for IT. It has been in the market since half a year only. Let's compare it to Nifty IT. Yes, nearly equal returns. Nifty IT has performed 30% return, it has performed 29% return. Nearly the same. Now there are many more ETFs that we can find. Now this is the website. It's a link on NSE where we can see the ETF. We have seen Edelweiss Nifty EES, we have ICICI Prudential Nifty ETF, we have seen Kotak Nifty, Motilal most 50 shares, then we have Quantum AMC's Q Nifty, Religare Nifty, SBI's Set Nifty, we have UTI's Nifty ETF, we have Birla ETF, we have ICICI's CNX 100 ETF investing in 100 stocks. We have seen Kotak Bank ETF. This is SBI ETF. We have seen M100. This is an SBI ETF, SBI ETF Nifty Junior, investing in the next 50. We have seen Kotak PSU Bank. Then we have ICICI Prudential and Sensex ETF. We have UTI Sensex ETF, Nifty Bees, Reliance, Nifty 100 Reliance ETF Bees. Now, by Reliance, I want to say one thing. It is Nippon. Basically, Reliance and Nippon are the one thing only. Then we have CPSC ETF. CPSC ETF is a little unique. It invests in stable stocks. You can see the in the constituents of this ETF. They aren't very high moving stocks. They are comparatively very slow moving stocks. Then we have dividend opportunities, consumptions, infra Bs, junior Bs, PSU banks, and Bharat 22 ETF. These are some ETF. There are many thematic ETFs, IT ETF, banking ETF. There are so many ETFs that are thematic and you can invest accordingly. Thus, ETFs are a better option to invest than mutual fund if you are interested in this. They would not give you multi-bagger returns like 50 to 60% CAGR because they are diversifying. But